Australia's economy created a massive 64,100 jobs in September. That's the most since February, and it's almost triple what the market was forecasting. The Bureau of Stats also revised the jobs figures for August, reducing the unemployment rate from 4.2% down to 4.1%. Full-time employment lifted by almost 52,000 during the month, and part-time jobs increased by about 13,000. The participation rate, which is the percentage of people either in work or actively looking for work, increased to a new record high of 67.2%. Well, joining me now is Kerry, global market strategist at JP Morgan. Kerry, thanks for your time. A lot of people were hoping for a rate cut before Christmas. Is that now going to happen or not?
No, there's not a lot in the data that the RBA would be looking at to suggest that was warranted at this point in time. Obviously, the labour market is still in rude health, and they've been focusing on that a lot, given that they are thinking about price stability and full employment in the economy. And they're probably also a little bit watchful of the wage inflation that could come through with this. For us, I think it's a case of saying that there is genuine strength in the labour market if we look at the data that came out today, but a lot of the forward-looking indicators do suggest that that won't persist, and you'll start to see that soften off. So I think into the new year, there's more likely a chance that the RBA will start to see that economy slow down, inflation expectations start to come back and allow them to ease rates, probably from February next year.
Yeah, the RBA was expecting the unemployment rate to get to 4.3% by December 2024. Do you think that's still likely to happen?
It would be a little bit harder now. You've still got a few months for it to come through, but obviously we've seen the numbers being revised down for August, and now it's in September, it's at 4.1, so not too far from that. I think the big surprise there is that there's been just an increase in participation rate. There's just more people in the Australian economy, more of them going into the labour market, and that's what's really driving these numbers. It's not so much that you're seeing softness in demand, or it's come off a little bit, but you're seeing a real big increase in supply, which is really the dominating factor in the employment figures.
RBA's next rates meeting is on Melbourne Cup Day. Before that, we'll get the September quarter CPI numbers. What sort of thing are you expecting to see in regards to inflation?
We'll definitely see a number that comes under 3% because you've got the impact of the subsidies coming in from the government that's lowering the monthly run rate that they're watching through. That's obviously going to feed through to the quarterly numbers. I think the RBA obviously knows those distortions are there, and they're probably thinking more around what would the figures look like if you didn't have that effect, and where is the trend for inflation. So it will be satisfyingly coming down, but again, I think it's not a signal for them that they need to ease rates when the economy is probably not quite in the right place for them. And it's also worth knowing that they haven't raised interest rates as much as other central banks around the world. They're probably not as far from that sort of neutral rate where you don't stimulate or restrict the economy, and so they probably don't need to start just yet when it comes to that easing policy.
Well, yeah, let's look overseas to the US, which obviously raised rates a lot more aggressively. The Fed's next meeting is just a couple of days after the Reserve Banks. Are they on a different path to us? Are they likely to cut again?
Yeah, well, they've already started. They've come out of the gates with 50 basis points in September. There was big expectations. You could see another big 50 basis point rate cut in November. But, you know, since they had that meeting into September, you've seen inflation that's been a little bit above what the market thought it would be. You've seen, again, a very good labour market number come out. So, again, they'll be dialing back their expectations. We expect them to cut by 25 basis points and follow that gradual path down into the new year.
Now, global markets, the ASX set an intraday record high just today. What's been underscoring the rally, not only here, but all over the world, really?
It's really this fading of any idea that you're going to see a recession. The resilience in the US economy has been remarkable, and in the consumption side of things. And corporate earnings have still been quite good if you look at what's happened in the US so far. So all that underpins a view towards equities and risk assets. And I think that that's going to continue. There's some concerns around valuations. Obviously, equity markets have got a little bit more expensive, but it just means we temper our return expectations from this point rather than moving away from equities completely.
And what about the Chinese government and some of the stimulus measures that they've been sort of drip feeding little bits of info over the past couple of weeks? Has there been anything concrete, though, or worth calling out that the Chinese officials have actually announced?
Yeah, I mean, they're making a really concerted effort. They're trying to reboot the economy. The investment has all been on the supply side, manufacturing and infrastructure. They've got the hardware right. They're just waiting for that software upgrade, and that's where they're thinking about the fiscal side, and that's where the market's really waiting for them to drop a big number and really show how they're going to drive, importantly, consumer demand, address the overhang in the housing market, and really build household balance sheets back up to allow that consumption to come through. The National Party Congress is the end of this month. That's the date we think they're likely to give more details on what that would look like, and maybe even a number around how big that fiscal stimulus may be.
Yeah, say if they do announce something big for the infrastructure or the housing sector, what impact might that potentially have on Australia's market and some of the big companies listed here?
Well, I think any time the Australian economy looks towards China, it's obviously been about resources and demand for those things. This is not going to be about this time. This is about driving consumer consumption in China, driving that household demand. And so it's going to be a slightly different tact. There's obviously going to be a positive sentiment impact that's going to play through to its trading partners like Australia. But I don't think that's going to be the same impact on the economy as perhaps we've seen in prior stimulus cases in China. But definitely a positive for both Australia and the global economy if the world's second biggest economy is growing.
And really quickly, it is US earnings at the moment. Is it going to be a good earnings season compared to the last one?
I think the most important thing around the earnings season at the moment is not over the aggregate earnings, it's where it's coming through. Right now we're seeing still expectations of those top 10 companies in the US, those mega caps, to really drive that earnings. What we're going to look for in the coming quarters is that rotation to the rest of the market, because that's where we think there's more value and more opportunity.
Kerry, Craig, thanks for your time.
Thank you.